Welcome to today's market recap, and thanks for joining. In today's session, I will demonstrate a swing trading technique that you can use in any market condition to identify truly high probability and low risk 360 degrees trades. I will use only one trading system for the complete analysis, Q. It runs on Metastock and TradeStation platforms. Q has multiple components covering market, sector industry rotation, fundamental, technical, and even seasonality analysis, all done in 100% real time. I will use several of them today. Q was designed by Sagar Nandi, an active trader in multiple markets. You can learn more about Q systems from the Learn page on the website superiorprofit.co. For your queries, you may use the email ID tradingprofitably@gmail.com. Follow me on X handle Superior Profit for live market and stock analyses, all shared before knowing the results. And visit and subscribe to the YouTube channel Trading Profitably to watch detailed market recap, masterclass, and many other videos. Disclaimer: this demonstration is for educational purposes only. Sagar Nandi, or superiorprofit.co are not investment advisors. Nothing in this presentation is a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if options trading is suitable for you. Now, I will use Q systems to carry out market analysis across 5 distinct non-overlapping dimensions. If all the dimensions are aligned, say bullish, the decision is easy. That is the preferred trading direction. If the dimensions are showing divergent insights, you may do one of two things. Either stand aside or swing trade in both bullish and bearish directions in different stocks. Which option to choose depends on balance of evidence from the dimensions. If you are not sure, you can always stand aside. Once I derive the preferred trading direction, I may look for high probability and low-risk trade candidates in that direction. First dimension of our analysis is to look at two instruments, US dollar and Mega Cap Custom Index, that have tremendous influence on the market. US dollar tends to be inversely correlated with the market, though sometimes that inverse correlation does not work. Mega Cap Custom Index is directly correlated with the market, and that correlation always works, with more impact on some pockets of the market than others. Dollar Index. In the last market recap when price was here, I mentioned that it was looking bullish, but I would not be buying it because it was also overbought. That was very useful analysis. After my market recap, Dollar Index created a bearish indecision cluster and price fell down. It fell down with large directional force on the bearish side and also large bearish momentum. Now it has broken both the daily trendline support and the weekly trendline support. The backdrop weekly color is bearish, and the daily traffic light color is also bearish. Everything is looking bearish. However, it is also near the lower boundary. Dollar Index is looking bearish, but I would not like to short it here. I'd like to stand aside. Mega Cap Custom Index. In the weekly, price opened lower, but sharply reversed, creating a bullish piercing candle. If you connect the highs of the past few candles, that line is still tilting down. Is it time to buy based on the bullish piercing candle? Let us look at the daily for more insights about that. In the daily, we have multiple trendline resistances, no trendline support. It has created lower low. Whichever way you look at it, has lower high and lower low. And from lower boundary level, it recovered right to the yellow direction line and the multiple trend line resistances. Though price went up for last 3 days with high volume, it seems to be a recovery in a downtrend. I would not like to buy here. If anything, if it falls down from here, I'd like to short. Notice also that it recovered right to the yellow direction line and also the 50-day moving average. If it falls down from here, that will be giving a pullback short setup. That will be a time I'd rather like to short than trying to buy now. Second dimension of our analysis is using Q market breadth, internal health check. Usually, the market follows the internal health, not the other way around. Total View Custom Index, the broadest view of the market. Let's first look at what is in favor. For a long time, small cap was doing better, but for the last few days, small cap is underperforming. For a long time, growth was underperforming, but for the last few days, growth started to pick up. Therefore, we have a switch from small cap to large cap, mega cap, and value to growth. Is that a bullish sign? This will be a time to put things into context. In context of what? In context of what we saw in the mega cap custom index. It rallied for the last few days, but came right to the trendline resistances and the yellow direction line. That was a recovery in a downtrend. Now we see that this change in what is in favor, from value to growth, from small cap to large cap and mega cap, is caused by the mega caps creating a rally in a downtrend. That is not enough reason to be bullish. Let's now look at the 3-month new high-low short-term breadth oscillator. It came very close to being extremely overbought and tilted down from there, as we would expect. That is also a bearish sign. We had one irrational exuberance earlier, Bango signal, and then a Hindenburg omen. However, price did not come down. Price is holding steady. Is there any cause for concern? To see that, let's change from this daily interval to weekly interval. And now look at advanced decline and up-down volume in the weekly interval, specifically to the sizable bearish divergences they are creating while price is continuing to go up. As I explained in the Q Masterclass videos, the divergences, if any, in advanced decline and up-down volume are best seen in the weekly interval as we are using now, and these divergences are a cause for concern. Later on, I will show that these divergences in the weekly interval exist in lower-level instruments like composites and major indexes as well. From the total view, let's drill down to the composites, NASDAQ and NYSE. First, let us look at the 3-month new high-low. In last week's market recap, I pointed to this oscillator in both NASDAQ and NYSE and showed they were extremely overbought. That was useful analysis. As we would expect, the 3-month new high-low has tilted down from there. These are on daily intervals. Let me now switch to weekly interval. In both NYSE and NASDAQ, notice the sizable bearish divergences in both advanced decline and up-down volume in both NASDAQ and NYSE. Price is steadily going up, but advanced decline and up-down volume, both are steadily coming down, creating bearish divergences, and that is a cause for concern. From the composites, I further drill down to lower-level pockets, small cap, mid cap, large cap, and NASDAQ 100, which is most influenced by mega caps. First, let me point to the 3-month new high-low short-term breadth oscillator. In the last market recap, I showed that they were at or very close to being extremely overbought. We'd expect a pullback from there. That indeed happened. The 3-month new high-low tilted down in each of them. That is showing weakness in the market. This was on the daily interval. Now let me switch to the weekly interval. The same pockets using weekly interval now. I came here to show that here also we have very clear bearish divergences in advanced decline and up-down volume across the board, though price is steadily going up. In all the pockets, up-down volume and advanced decline are coming down, creating sizable bearish divergences, and that is a cause for concern. Third dimension, market external view. This is how most people around the globe see the market. This analysis can be done using market ETFs, futures, or indexes. I will carry out this analysis using Q at a glance weekly daily charts. When looking at the market ETFs, I try to answer two questions. What is the trend and what is the preferred trading direction? They may not always be the same. Let's do that for the four major market ETFs, starting with SPY. In the weekly, backdrop candle color is remaining bearish, the same as it was in the last week. The shape is bullish. It opened lower, but closed higher. Though it closed higher, it still closed down relative to 1 week ago. Therefore, it was a down week. That is not bullish. In the daily, it is practically moving inside a range. It is near the high of the range, not the low of the range. That is not allowing me to buy. Instead, if it can tilt down from here, I may look to short. If I look at the daily and try to answer the two questions about trend and preferred trading direction, the trend is sideways, and my preferred trading direction will be bearish, provided it can come down from here. QQQ. Backdrop color is bearish as it was 1 week ago. Over several weeks, it is underperforming the market. If we look at the daily, it is range-bound, the range created by trend line resistance and support, and it is right in the middle of the range. Answering the two queries about trend and preferred trading direction. Here, the trend is sideways, and my preferred trading direction is to stand aside because it is right in the middle of the sideways range. DIA. Relative performance shows it is outperforming the market. In the daily, it has higher high and higher low. Therefore, unlike SPY and QQQ, it is not moving sideways. It is in an uptrend. Though it is in an uptrend, Friday's traffic light momentum color is bearish red, and weekly backdrop color is also bearish. If we look at the volume or activity, it is showing this was a down week. Traffic light and backdrop momentum both are bearish, but it is in an uptrend. It has many trend line support right below Friday's close. Therefore, it is not allowing to short, and it is not allowing to buy as well. My decision here is to stand aside. Lastly, the small cap ETF IWM. Relative performance shows it is outperforming the market. It was the strongest pocket in the market, but even IWM came down this week. We can see that from the volume bar being in red color. Weekly candle shape is mixed, though the color is remaining bullish. In the daily, it displayed a bearish indecision at the top, followed by a bearish headwind, possible reversal signal unique to Q systems. And Friday's candle fell sharply right after the open. It in fact opened with a gap down and fell throughout the day. That drop happened while price is at jump thrust high and price extreme high. The nearby trendline support is far away. The trend is clearly uptrend because it has higher high and higher low, very much in an uptrend. However, because it has multiple possible reversal signals at jump thrust high, price extreme high, and the support being far away, I do not mind looking for a short in small cap stocks provided they give proper Q 360 degrees short setup. In this case, the ETF is very much in an uptrend, but using the Q reversal trades, I am able to look for shorting ideas. Our fourth dimension analysis is about sector industry stock breadth using Q Edge. It shows the sector industry scorecard in real time and allows easy drill down to strong fundamental stocks. It also has bucket analysis, which pinpoints reversals with remarkable accuracy. Bucket analysis from Q Edge. It shows 63% of stocks in Q Edge, that is S&P 1500, are above mid-Bollinger Band. That is bullish. Only 3.4% of stocks are above upper Bollinger Band. Therefore, it is not overbought. Sector industry stock breadth. 1 month and 10-day longer-term periods are bullish. Medium-term period, 5-day, turned bearish, and 2-day and 1-day turned even more bearish. The bullishness is reducing and the bearishness is increasing. That allows shorting, does not allow buying. The fifth and last dimension of our market level analysis is technical breadth using Q Finder. Most of our trades are directional trades. For such trades, we profit by buying stocks going up or shorting stocks coming down. Technical breadth helps by showing the overall posture to adopt bullish or bearish, and allows easy drill down to find low-risk trade candidates in that direction. Weekly technical breadth. Overall, it is mixed, slightly bullish. Reversals are more bearish than bullish. This is not helping us decide the preferred trading direction. Weekly technical breadth did not help us to decide preferred trading direction, but that is not the case with daily technical breadth. Here, we are looking at the daily technical breadth, and it has many signals that allows shorting. First is, it has a jump thrust green alert, meaning too many stocks are at an unsustainable high level. We expect them to come down. It also has a headwind reversal aggregate alert, meaning stocks that were at a very high price level are at a risk of coming down. That is what the headwind and the jump thrust alerts together tell us. Overall, Friday's technical breadth is bearish, and it is also bearish across all the three categories, including reversals. Momentum is also bearish. All these signals allows shorting, does not allow buying. Based on the analysis of the 5 dimensions, we are now ready to arrive at the most important trading decision. That is whether and where to buy or short, or whether to stand aside to decide the preferred trading direction. What is our market level conclusion this week? Let's start with the instruments that affect the market. Mega caps went up for the last few days, but stopped right at trendline resistance. Does not allow buying. Market breadth is showing bearish divergence of up-down volume and advanced decline across the board. None of the market ETFs allow buying. IWM allows shorting using reversal setups. Sector industry stock breadth allows shorting, does not allow buying. And daily technical breadth also allows shorting, does not allow buying. Considering all these together, my decision is to avoid buying. Protect profit in existing long positions, and I may even look for shorts, possibly small caps that are at a higher price level. Review of trade ideas shared earlier on YouTube or X. I regularly share live market analysis and trading ideas on YouTube and X, always before knowing the results. You may subscribe to the YouTube channel Trading Profitably and follow Superior Profit on X to receive the analysis and ideas in real time. Week, I shared only one trading idea that was a shorting idea in AA Alcoa based on last Friday's candle. This week was a trading day of 4 days. Monday was a trading holiday. As I mentioned in the last market recap, I did not have any position in AA. And I mentioned I would not mind shorting if I got an entry opportunity using precision entry techniques. On Tuesday, the first trading day of last week, price went up. It did not give me any short entry opportunity. On Wednesday, price went up initially but did not move up after that. That was the day when I entered a bearish position using options. I chose options because earnings was nearby. I wanted to have a defined risk trade. On Friday, price initially came down and then recovered higher. Seeing that it was starting to go up, I booked my entire position profit. How did I exactly enter and exit the trade? That will be clearer if I take you to the Pivot Precision Entry Chart template, as it is here. This was Tuesday. This was Friday's close. On Tuesday, price went above the early range high. Therefore, it did not allow any short entry point. Next day, Wednesday, price tried to go up in the beginning, but then slowly came down, and it also broke below the early range low. You could take a short position at that time. I took a short position using option strategies. What kind of option strategies could you use? You could use short call vertical, long put vertical, or long naked put. On Thursday, price again tried to go higher, but came down throughout the day. After Thursday's close, it had earnings. On Friday, price opened lower, tried to go down even more, but recovered. Seeing that price was starting to go up, I booked profit in my short position. This trade again closed with a profit. This week's trade ideas. I start my search for this week's trade ideas from QFinder. Why? For one reason. Most of the trade setups this week as of Friday's close are bearish. QFinder also showed that we may find shorting ideas in stocks that are at unsustainable high level, jump thrust high. Those could be at price extreme high also, and we could even look for a short setup in such stocks. With a bearish headwind, I found such a stock, and I'm going to share that with you. But before showing you the technical chart, let me show the fundamental scorecard from QVital and industry scorecard from QEdge. Fundamental scorecard from QVital. The stock is GS, Goldman Sachs. It's in the investment banking and brokerage industry. It has moderate valuation. Earnings growth is coming down. You can see that from the graph also. Revenue growth is also coming down. Insiders are selling. It has poor earnings quality. Earnings is over for this period. Next earnings is in April. Majority of peer stocks, 75% to be precise, came down on Friday, showing the industry in itself was weak. How is the industry's relative scorecard? We can look up the industry scorecard from QEdge. Let's do that now. QEdge shows that the investment banking and brokerage industry, Goldman Sachs's industry, is weak, and it is also decelerating. We can see deceleration from the PACE columns as well. On Friday, the industry was down by a massive 2.3%. The industry allows shorting, the fundamentals, with decreasing revenue growth, earnings growth, insider selling allows shorting. How are the technicals? Let's look that up from Q Global on Metastock. GS using weekly daily at a glance. Relative performance line is tilting down, showing GS is underperforming the market. The weekly backdrop color is bearish. The candle shape is also bearish. And on top of that, we have a bear release signal. In the daily, it displayed a bearish headwind. Right on the day it made a new all-time high. How unique is this signal? Gave a possible reversal signal, headwind signal, right on the day it made a new all-time high. It also created a false upside breakout. And as of Friday's close, it is broken below the trend line support. With bearish flow, it is giving a breakout short candidate. And remember, we also looked at jump thrust high in QFinder. This stock is at jump thrust high and price extreme high. On Friday, it not only fell sharply, it did so with a massive 5 count of direction forces, bearish direction forces, and also a massive 6 count of bearish momentum. GS is my this week's trade idea, a shorting idea that is a breakout short setup. I don't have any position in this stock. I may try to take a bearish position next week using precision entry chart if I get an opportunity for that. If you carry out the 360 degrees analysis using Q, you will most likely find many trading candidates today, just as you would almost every other day. Now that you have seen Q in action, it is over to you to benefit from that. I will end today's session here. I look forward to seeing you in my next session. Have a great day. And as I always say, as the live examples show, there is no reason not to do that. Trade profitably. Thank you.